Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at the concept of a interesting pattern recognition. The name is Rickshaw Man, and this name is also interesting sounding, and particularly in India, if you have been there, you might have noticed there is a type of a three-wheeler which is called as a rickshaw. So when I was reading about this indicator, that image immediately came to my mind. Now in a market, the pattern can be similarly used to take us from one place to another. By that I mean, of course, to make us richer than we actually were a while back. So we have to use this pattern to make money and figure out the opportunities in which we can have higher probability of getting our trades right. So let us now head to the JForex for the newly released trading platform from the Dukascopy Bank SA. Here you can add it using the F3 option. A quick search will get you this indicator added. So here it is. This is a one type of a doji candlestick in which the body of the candle needs to be closer to the central point or at the central point. So it has long shadow on both sides. The upper shadow and the lower shadow needs to be quite long compared to the real body of the candle. So we have this doji candlestick in which we are actually looking at the indecisiveness, and by indecisiveness we get the idea that there is a equilibrium around the price. Neither the sellers nor the buyers are having a upper hand, and that indecisiveness makes it formation in which you can use it as a consolidation tool. So you can see what kind of price action is there prior to this formation of the rickshaw man, and using that context you can determine whether the existing trend is likely to persist or if it is likely to reverse. So we have to always look at the price action leading up to the rickshaw man formation, and when we see it happening after a significant price rise, then it might be indicating the possibility of the reversal in prior trend. If it is happening simply after the start, then that means it is likely showing the further continuation in coming candle periods. And if it is happening after a steep decline, then you can also use it to look for the possible reversal on the upper side. So you can use it as a bullish reversal tool, you can use it as a bearish reversal tool, and at the same time you can also look at the possibility of its use as a continuation formation. So this is a multi-purpose pattern in which you have to decide the utility depending on the context. So it becomes very important for you to use it along with the other trend defining tools like maybe moving averages or other setups in which you feel confident enough to judge the existing trend, as this formation is not going to give you the idea of the trend, as its very nature is of showing the indecisiveness in the market, given the fact that this formation takes shape when there is equilibrium around the middle point of this particular candle. The only requirement is that we should be looking at the volatility, average volatility, and using that we get the idea of how long the upper and the lower shadow should be for this particular formation to be reliably used. And using that requirement we can then try to initiate the trade. So here I will give you some examples. Now if we look at this formation here, in this case we had the say this doji candle which is looking like a hammer, even though we need the candle body to be around middle point. It is not exactly as per the criterion, so I think we will have to omit this. This is more in line with the criteria of the body being around middle point. But if we look at the average volatility, it is not having the long enough upper shadow and the lower shadow. So from that criterion, you can omit this particular Rickshaw candle as well. This is, I think, much more reliable as it is having good enough, long enough shadow on both the sides, as well as its opening and the closing. This difference between the opening and the closing price is quite close to the middle price, middle point of this particular candle. So using this kind of filtering mechanisms, you will have to pick up and omit some of the formations recognized on the chart, because not all the formations are going to be equally effective, given the fact that this is a simply a pattern which is going to give you the equilibrium. So you have to see what kind of market participation was there leading to the equilibrium being established. If the shadows are long, that means the price was moving sharply on both sides, but eventually the equilibrium was reached. But if there is not much of a movement in that scenario, there won't be shadow on the upper as well as on the lower side. So it is more of a neutral ground. Now we have looked at this. Let us also go back in time to find other examples. In this case, you can use it as a continuation, but if you look at this volatility in lead up to the candle, you will see that this shadow is not really long enough on both sides, so it is better to overlook it. Maybe this one is quite good, it has long shadow on both sides, and it is also in line with the volatility observed in lead up to this particular candle formation. So this can be utilized as a possible reversal point, and it did materialize that way. If you were to trade using this formation, it would have lead up to a significant amount of gains in terms of this move, which went on to rise almost 50 pips. This particular formation is also of the reversal, but it was not having that much volatility. Its upper shadow and the lower shadow is not really long enough, so it was better to be overlooked, even though the reversal did start here. Same thing we can apply for these all the formations where we have to define these context and then take the decision of whether to utilize this formation or whether to omit it, whether to overlook it. Now let's consider the editing options provided on the platform. There is nothing we can do in terms of the input editing, so this has been disabled. Coming to the output, you can always go for the color combination of your choice. So you get this styling combination. You can go for the bracketing or full coloring of the recognized candle. I think this looks better. Of course, you can opt for the full shading of the candle as well. The transparency factor can be varied. If you don't want this pattern recognition to look too prominent on the chart, you can reduce the opaqueness and increase the transparency. If you go for the high transparency, it will be just there to be recognized, but you will not see it given much prominence. Okay. Advanced editing options. Suppose if you want to work with the formation, then you also have to know how to better customize these options. But given the fact that this particular candle formation is simply based on a single candle, this recalculate on new candle is not really going to cast much of an impact. Highlight the time period zone, same thing applies here. Only single candle is going to be highlighted, which is going to be regardless of if we apply for this option or not, because we have these styling combination for output in place. Then this option has been disabled, show indicator on all periods. Whenever you want to have this indicator available on all the candle periods, as and when you change the chart's candle period, it will be available. Else you can specify Suppose if you want it on 5 minutes and hourly only, then you can do that. Now if I change to 5 minutes, it is visible. Same thing happens when I change to hourly, but if I change to, say for example, 30 minutes, then you will see that it's not really available there. Okay, same thing applies for 15 minutes or any other candle period for that matter. So you have to specify on which candle period you want it available, and only on that particular candle period it will be available. So it makes it easier for you to have multiple pattern recognition applied on different time frames to gather more data points to trade with, so that your trading becomes much more effective. So that's how this system works. So now I am reverting back to show indicator on all periods. All right. So with this representation for the concept, the possible uses of these interesting combination, the Rickshaw man, I'm wrapping up the session. If any of you have any query or any idea to share, do write to me on the feedback panel, and I would be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. We are also providing the link for the newly released trading platform, which is there in the bio. So give it a try and try out this formation and let me know how it works out for you. So that's all for the day. I will be back tomorrow with a new interesting combination to work with. See you next time around. Till then, goodbye.